Good afternoon, everybody. It's 2:31 p.m. here, and the market has just closed over an hour ago, and the market looks fantastic, let me tell you, at least in the short term. There's a few things I want to go over. I want to go over today's housing data. I want to go over Trump's inauguration a little bit, and I want to go over some technical analysis to show you what SPY is doing. I think we have the potential to rally, at least to retest all-time highs. And if you watch the previous video, I mentioned that there's a certain indicator that I use to determine are we bullish or are we bearish, and it's all bullish this morning. So I'm going to show you a day trade that I took as well. But first, let's get into the data. Okay, so today we had a lot of data come out. We did have a lot of housing data. We had a lot of housing data come out today, notably these two right here. Okay, so we had the building permits. Building permits in the United States decreased by 0.7% to a seasonally adjusted annualized rate of 1.483 million in December. This beat the market expectations of 1.46 million. Okay, that is probably why we had a pretty good day today, or somewhat good day today. The other data point that we saw was United States housing starts. So housing starts in the United States surged by 15.8% from the previous month to a seasonally adjusted annualized rate of 1.499 million units. The most since March of 2021, which is 3 years ago. If you look at this graph right here, December surged by 15.8% to 1.5 thousand units for housing starts. This sharp increase definitely suggests robust activity in the construction sector. This could indicate a lot of economic confidence. A higher number of housing starts often reflects strong demand for housing, and this is probably pointing to a somewhat healthy economy. One thing that I want to mention about the building permits. The building permits, they decreased slightly, right? The United States, the building permits in the United States, they decreased by 0.7%, right? Probably not the greatest thing, considering that permits are a leading indicator of future construction activity. There's a slight decline. It's not super alarming. The good news is that we actually beat the expectations. The market was expecting it to lower even more to 1.46 million. We actually came out to 1.48. So this also implies that there is ongoing confidence in the housing market. Some things to consider on the other side, on the bear point of view. If building permits decline, since these are forward-looking, decline, it could signal that some people are anticipating weaker demand, or they face challenges such as rising construction costs, higher interest rates, or maybe regulatory hurdles. Anything that kind of goes into that. If the permits continue to decline, it could lead to slower future growth in housing. Potential interest rate activity. We're not really expecting the FOMC to cut rates. We might get one if we're lucky. So that could, since it decreased, there could be, since rates are higher, they're going to remain higher for longer. That could signal there's going to be a decrease in housing starts because of that fact. So overall, with the S&P 500, we were up 1% today. I'm taking it as the stock market interpreted the housing starts as positive, suggesting economic strength and demand. I do think this is a net positive for the market, at least in the short term. Long-term implications, they do depend on interest rate trends, inflation concerns, and the sustainability of the housing activity. So I do think this is pretty beneficial for the market in the short term. One thing I want to mention, it's going to be a 3-day weekend. The market's going to be closed on Monday. But just because the market's closed on Monday doesn't mean that it could be a big day. On Martin Luther King Day, market's going to be shut down, but President-elect Donald Trump's inauguration will begin. This has all the makings of a momentous event, spawning a raft of market-sensitive news and policy announcements moving forward, of course. Trump's return to the White House will have big implications for stocks, bonds, and other assets. Investors have priced in a view that he'll fully follow through with his promises. Bitcoin has popped back above $100,000 for anyone that trades crypto. I personally don't really follow it, but that is a good sign. Currency traders are taking the president-elect tariffs plan seriously. Treasury Secretary nominee Scott Bessent said yesterday that a 10% tariff should cause the greenback to appreciate 4%. About the amount has gained since the election. That's bad for stocks since it reduces the value of any company earnings abroad and makes U.S. exports more expensive. So if we have a stronger dollar, this will put a reduction in the value of foreign earnings. For multinational companies, revenue generated in foreign currencies lose value when they convert back to USD because the USD is much stronger. US goods become more expensive for foreign buyers because their local currencies are weaker relative to the dollar. This could lead to declining sales abroad. Also, tariffs increase costs for US companies, especially companies that rely on imported materials. These costs can squeeze profit margins, or they can be passed on to consumers. And if they're passed on to consumers, that could potentially reduce the demand. And of course, supply chain disruptions. If we have tariffs, this could force businesses to restructure their supply chains, which will lead to inefficiencies. So if we take all those, if we have lower foreign earnings and higher input costs, especially in the supply chain, then this could directly reduce corporate profitability, right? Corporate companies are paying more in their supply chains, and they are delivering those higher costs to consumers, and that could potentially reduce demand. And if demand is reduced, then people aren't going to buy the main company's products anymore, and that could reduce the corporate earnings and revenues and earnings per share, and that could drive stock prices down. So that is something to still be aware of, everybody, when we enter 2025. The inauguration will be big, and we're going to get more information on that policy. But overall, with the amount of uncertainty, tariffs, deregulation, tax cuts, that's all going to be for us to dive into over the course of the year. For now, let's take a look at what actually happened today on the technical end and why I can see the stock market potentially doing very well. So here it is. We have the S&P 500. As we all know, we had the head and shoulders potentially develop. This was over December. I was watching it. I was like, oh no, this is not good. We might see some decline in the stock prices. However, that didn't come to fruition. I went over in the last video, and we were up 1% today, especially off the housing data, which came in very nice. So that being said, I went ahead and I drew my Fibonacci's, right? Fibonacci's, how you draw them? 0.1, 0.2, 0.3. All you have to do is draw it from your low trend, from your low to your high to your next low. Boom. That gives us key levels. And again, we want to make sure that the levels are respected. If the levels aren't respected, do not use an indicator, and that goes for any indicator. Okay, whatever stock you're trading on, if you're using a moving average, if you're using a Bollinger Band, or whatever the case may be, you want to make sure that it is respectable, because that means other people are using it as well. This seemed very respectable for me. I'm going to dive into a lower time frame and look at the 4-hour. Okay, boom, look at this beauty right here. Let me change my pen to white. Okay, look at this beauty. Okay, so we actually moved upwards. We hit the 50% level. We rejected. 50% is a key resistance on most Fibonacci. Okay, we moved downwards and we respected the 23.6%. We did not close below it. Respect. Okay, CPI came in. We had a huge gap up move, and we had the 78.6% level right here. Wonderful. Look at how well it is respecting it. Boom. Okay, support. Not to mention our biggest level, 100% at 594.55. This was a huge level right here. And we were respecting it greatly right here as a key resistance. And we got the push down. And honestly, with the data that came out yesterday with retail sales, if that data came in worse, we probably would have saw an even further push down. But that did not happen. Housing data came out, and we ended up increasing even further, and we overtook the resistance, and we're now moving higher, as we can see right here. And what's the next level? What is the next level that I was talking about beforehand after the 100%? Potentially 606.42. Now I want to make something very clear here, that I do not know what's going to happen in the stock market, and nobody knows what's going to happen in the stock market. I'm simply using these levels as an edge, which is a higher probability of one thing happening over another. So do your own due diligence. Watch, respect, and manage your own risk, and you should be well taken care of. All right. This today was doing very well. I cut my bearish trades. I got rid of my bear call spreads. I was like, you know what? I am not going to hold these in the face of a market rally right here. I would say so far it was a pretty smart decision. Okay, look at this candlestick right here. What does this tell us? This is a potential spinning top candlestick. For those of you that don't know, a spinning top candlestick pattern goes like this. It's a potential reversal pattern. Thanks, Rupisi, for this wonderful diagram. So reference is everything. Where are we at? A potential support level. Some might say a potential resistance, and that's fair. I totally understand that, right? We do have a point right here, okay? And we do have a point right here based off of our previous highs, okay? And I can definitely see that. This level does not need to hold, everybody. This is only purely what I see and purely my opinion. However, if I was bearish, I would not want to be holding this. I would want to see this reject, okay? And we may see a huge swing up to retest these all-time highs. And if we look at the 4-hour chart, that's exactly what we're doing today as of right now. We're seeing a little red candle right here, 599.7. That's the level I marked right here, which is this previous high. Totally get it. We can reject, but let's see how far we go. If I go to the 1 hour, we had a nice little flag / pennant, which looked pretty good. Okay. Nice. Look at that right there, right? I'm putting some puzzle pieces together. That's all I'm doing. I'm finding data that's going to support my thesis while also giving respect to the bear side. We don't want to have confirmation bias. I'm going to throw on some moving averages. Let's throw on the 50 and the 200. In the 50 and the 200, we have a golden cross. Okay, I know some of you may be familiar with the golden cross. Golden cross is a fantastic indicator. When these two moving averages cross, that is giving us a bullish conviction. It's just another indicator in our favor. If we see a death cross, kind of like what happened right here, well, that's not going to be so pretty. It's just going to be on the bear side. This is a golden cross right here. And we're moving up now slowly, okay? Moving up very, very slowly. What I did is today I've actually gotten into some I've gotten into some bull put spreads. Okay, I'm trading these ones right here. The 565 put and the 575 put. 4 contracts piece, 42 days out. Currently down $10 right here. Before this, I made some transactions today. I got into a 606 call right here. 606 call. I bought this call 5 minutes after the market opened because I saw 5 minutes after the market opened, right? If I go to my 5-minute chart and look at our first candlestick, this is the first candlestick right here. We came down and I got in this area. I got into a call option in this area right here. I was like, hey, we're retesting. We're getting close to this 100% level. And not to mention, if I go back to pre-market, I marked this, our previous high right here. What's our previous high that we had about a day and a half ago? Right here. Whoops. 595.65. We retested that and we bounced. Completely look at this. 5 minutes. First 5 minutes, we came down. Second 5 minutes, we retested this. And this 5 minute, we had a doji candle right here. I was like, I need to get into the call option now because we're probably going to see a big move. And that's exactly what we saw for the day. And the day wasn't huge. I think today we had, we went as high as 5.99. We went as low as like 5.5. Around a $4 range. Nothing too crazy. But I got into the call option. I'll show you the fills right now. I bought it for $6.93 for the 606 call option. Now, I sold the 606 call option right here, 606 call option for $8.06. I only traded one contract. I kept it super light. I managed my risk because I understand that the market does not need to go in my favor. That is okay. Okay? I just had conviction. That's it. So what happened is I bought it for $6.93. I sold it for $8.06. I made about what? About like $115, something like that. Yeah, like $113. I honestly could have held this for much, much longer. That's the question that I asked myself. I was like, hey, we're getting a good day today. Should I hold this through the weekend? But I was kind of like, hey, you know what? Let me just take a day trade today. Let me take my profits now, $113. That's like, for one, that makes up some of the loss that I took on the bear call spreads, okay? I sold my bear call spreads. I was like, hey, you know what? I'll take a loss on this. No problem at all. Let me get out of that. So it covers that, some of it. And also, it's just $113. Like, you know, that's a date night for two. You know, for all my gentlemen out there, you know, if you want to take your girl out and that's food. You know, that's gasoline. That's like what, 2 or 3, maybe 3 tanks right there, maybe 2.5. If you're driving a car, that's 1 tank. That's a little skeptical right there, man. But I was like $113 in what, from 635 to 950, made about in 3 hours. I was like, sure, I'll take that. But I understand that we haven't met the price target yet. So I got into bull put spreads by the end of the day, and I'm holding them, and we're going to see how they do over the weekend. Market can tank. Market can come right back down and plow through this 100% level. One other thing, the 50 moving average, this blue line right here, excellent. That looks great, doesn't it? We bounced off of it. Spinning top, this is now acting as support, and our 100% level is now acting as support as well. So I think that this is mainly in the bull's favor for the time being. What happens when we do come back up and retest all-time highs? If we do, I'm not sure. I'm probably not going to be bullish just yet. We might see some rejections. One thing on the bear side, okay, that I do not like. If I get rid of this drawing here, we still have this gap here. And what does SPY like to do? SPY likes to fill gaps usually, most of the time. This gap right here, remember we made this gap on the Trump? When Trump got elected, we filled it, right? We just filled it a few days ago, right? And that just tells me that we have the possibility to maybe come back down to the 580 area at some time in the future. And that's surely a possibility. So that's going to be it for right now. We'll see how this turns out. We had good housing data. Trump's inauguration is this weekend. We're going to see, we're going to get more information on policies, tax cuts, deregulation, tariffs. It's all going to be super fun year. And for the meantime, I think that the S&P can do very, very well for the most part. And also QQQ, one thing I want to go over QQQ as well. QQQ actually ended up breaking out of the channel slightly, albeit I'm not a huge fan of this candlestick right here. It's kind of like a hanging man. So we kind of broke out of the channel a little bit. I can kind of go look at the 4 hour to see kind of like what it's doing. We're holding that 200 moving average right here. We do have a death cross. Let me go to a 1 hour chart to see if it makes a little bit more sense. We'll see. We're kind of retesting that trend line. Hopefully we get a bounce. We'll see going into the weekend. Let's look at some of SPY's biggest holdings. Apple was up 0.75% today, so Apple had a okay day. It was nothing crazy. Nvidia was up 3% today, and then Microsoft was up 1.05% today. I'm looking at all these numbers up here. All right, so that's going to be it for today's analysis. Good luck to everybody. Have a wonderful weekend. It's MLK Day. If you're going on a little trip, enjoy it. Enjoy your family. Enjoy your friends. Enjoy yourself as well. Have a good time. And thanks for listening. Thanks for watching.